fact that we did see that 70% jump in claims last week, how much worse could this get in terms of some of these numbers, especially as we are starting to get some of this qualitative data and reports that quite a number of companies across quite a number of industries are now having to let workforces go?
So, Morgan, over the course of the next several months, the data that's going to come in from the United States and across the globe is going to be highly disturbing in regard to a major slowdown of the U.S. economy as well as the global economy. With that said, Morgan, we believe that investors now have to take a look out in 2021 and into 2022, and we would be buyers of this market and slowly start to layer in risk at this point in the cycle.
That is key. I'm going to hone in on that from you, Chad, because I know in the past you've been pretty cautious on this market. So to hear you say that you would actually be buyers here, but that it very much depends on the timeline and being a longer-term investor, I think is pretty notable. What specifically would you or are you buying right now?
So we are looking across all sectors. They've all come down quite a bit in a precipitous manner. So we would take a focus on consumer staple, healthcare companies, selected industrials. Our focus right now is that we're looking for companies that have very little debt on their balance sheet, as well as they have to be very consistent with a broad, diversified product line and client base. Overall, when you're watching this market come down, many of the companies that are in real distress are companies that have to rely on the credit markets. And as you see this credit dislocation unfold, those type of companies on the equity side are the ones that are suffering the most.
So does this mean that you feel like we are close to a bottom in the markets right now, or that we've just sold off so much that there's value to be had on a longer-term basis?
So, Morgan, the market could obviously go down another 15%, but we believe that if investors look out beyond 12 months, then you can buy many very good quality companies that have this broad quality to them. And the critical word there, Morgan, is quality, that you could do very well over the next several years. Yes, the credit markets are right now in flux. Yes, the municipal bond market also is not functioning correctly. But this is the time now to start to layer on risk. And these are the opportunities now that you did not have 6 to 12 months ago.
Got it. Very quickly, Chad, what are the key data points that you are watching right now? Is it jobless claims? Is it coronavirus numbers that we're getting on a daily basis? What else?
So I would definitely be watching the Thursday initial jobless claims numbers. Yes, they will look horrific over the course of the next several months. Also, I would look at the GDP expectations that are going to come out.
Yep.
Do not get rattled by a negative number, not only here in the United States, but also across the globe. I believe that has been priced into the risk markets.